All right, let's get started. The topic of our panel discussion is accelerating COVID-19 business recovery for banks with IoT analytics. Our expert panelists can share their experience, lessons learned, and best practices from working in and through the new normal landscape that is the finance industry today. So let's go ahead and meet them. First, we have Mr. Sankha Ghosh. Sankha is the Executive Vice President and Global CIO for MoneyMart Financial Services. He is responsible for technology transformation and digitalization of the enterprise. He brings over 25 years of IT leadership experience in the areas of enterprise data management, analytics, process automation, artificial intelligence and machine language, and also consumer and commercial lending platform implementations. Prior to MoneyMart, Sankha held several CIO and leadership positions at General Electric and Synchrony Financial. Our other panelist is Mr. Suman Mahalanabis. Suman leads product management for digital software and solutions within TCS, performing leadership roles in product development, solution design, consulting and delivery of analytics and customer engagement solutions, including banking, financial services, retail, communications, and smart cities. Gentlemen, welcome, and thank you for being here today.
Thank you, Doug.
Let's take a look at how financial organizations can successfully emerge from the COVID-19 lockdown. Sankha?
Yeah, so, again, when I look at what is happening, and I'm going to only talk about at MoneyMart what we are seeing and, what is changing on a daily basis. So for our business, acceleration is really, really, really critical. That would enable us to become a bricks and clicks organization. We were primarily a bricks and mortar, business with a large number of branches across the two countries. We want to now become more of a bricks and clicks organization, right? So we had some of those digital capabilities pre-COVID, but we just need to make sure that everything kind of works in the digital world for us. We need to move faster than what we had envisioned. We had like a 2-year plan. Well, we probably need to do this in a year or less. And then we have to continue to advance our data and analytics capabilities. As we become more of an omni-channel organization, we're never going to get rid of our retail network. That's a differentiator for us. It's going to stay there. It's going to be, digital will become an able companion of our retail network. So we'll always keep that. But we are truly going to emerge as an omni-channel company. And that would require us to rethink how we do, reimagine how we do data and analytics today to provide that seamless experience to our customer, right? So that's what we are kind of looking into. And data analytics will be really at the core of everything we do. We are expecting, and we are also seeing through the data now that a large segment of our customers will interact with us digitally. They are getting used to it. In our personal lives, we are shopping more and more digitally, right? Starting from groceries to clothes to all of that, right? So I think that is going to become an habit, right? And that's something that the customers are going to do. And like many companies, we are seeing that huge shift. We want to build that frictionless experience for our digital customers. Now, we fully expect that a customer who has an immediate cash need would probably start a transaction, get the underwriting, get the approval online, and then want to quickly drive to a store and get cash if that's what they choose to do. And we have enabled some of that, but we just need to be really fast at approving those type of transactions by looking at the data. We need to provide our store agents with the capabilities to ensure that they can see everything that the customer has done with us up until that point or even after, so that they can better serve those customers, right? So what becomes really important for us is how we detect fraud, how we perform KYC, which is Know Your Customer, how we can leverage AI. And we have done some proof of concepts with AI for underwriting. We just have to figure out a way to expand that. And auto decisioning is going to become a big focus for our company. How we leverage AI for our collections, because we need to do better on collections as we do more digital, and other back office functions, will all be driven by this data analytics capabilities. And it needs to be more real time. I mean, we always talked about data analytics being real time. For years, decades, we have been talking about it. I don't think that we have ever faced a situation like we are facing now. Obviously, we didn't, but now the real-time analytics becomes so critical, especially for companies like us, where we need to really, really look at what is happening to our customer base, to the interactions that they're having with our agents, or portfolio analytics. All of that needs to be performed at a real-time basis. So I think data analytics is going to be at the core of how we come out of this situation.
Right, Shankha, and a great point, especially starting with what you talked about, that consumers and customers are getting adjusted to the new normal, especially around the digital migration that we're seeing. And towards that, really providing a connected experience where the translation from the physical landscape to digital landscape is seamless, and providing a connected journey as an experience is a very strong theme. And in fact, this is a problem statement that we had been working upon with our solution, Customer Intelligence and Insights. And what we had been using the solution for is, how can you discover these physical digital journeys? How can you really link the journey progression for individual customers and translate that into knowledge as to how and where their preferences are, where they're facing most of the challenge, and in case there's a sort of a hurdle where they're not able to complete the transaction, how can you leverage real-time analytics to quickly trigger an action like click to call, click to chat, and so on, and help make that transition. At the same time, how do you really leverage data to provide this kind of a zero-based approach, where if I can leverage, based on customer consent, the public data that is available, and with the minimum information, it can be like just like taking my picture, or it can be just providing some key identifier. I should be able to pre-populate most of the KYC needs and provide a zero-based approach towards onboarding. So these are some of the very critical capabilities that are becoming very useful, because there are a lot of customers who are now migrating to digital, where they had been earlier used to a very branch and personal experience. So how do you convert a dialogue, or how do you really convert a digital experience to a dialogue through real-time interactions, real-time reach out and outreach and education to customer? That becomes very critical. So that's a key aspect of front-end and front-office operations, so to speak, and truly to the vision of omnichannel. But at the same time, if you see, as customers are migrating to digital, it becomes very important from your operational perspective, where your back office and middle office also starts catching up, because the speed of transaction is way different than earlier in your physical model. And that is where, Shankha, your point on leveraging AI, ML towards some of those automated decisions, and in terms of credit scoring, in terms of originating loans, in terms of underwriting, all these becomes very, very important. And that is where, if you really look at the kind of models or the credit models that were there earlier, you would look at typical parameters like debt-to-income ratio, payment-to-income ratios, and so on. In the current scenario, and going forward, it's COVID is here, but tomorrow it's really giving a lot of learning for us to adjust to. The whole credit rating parameters, we need to really get down to a granular level of behaviors, really interpret how our payment behaviors, the granular data around payment behavior, the view on how digital adoption and digital online behavior and clicking with the clickstream data, how we can leverage and overlay that with some of the social data that's available, overlay with some of the quantitative parameters like I talked about, debt to income and payment to income ratios, to do a very unique and very targeted understanding of customers' propensity towards and their ability to really take on some of the financial liabilities and asset products that are there. So therefore, ability to translate data into newer ways of credit scoring has become very important. But while we do that, the importance of governance around AI, and especially around explainability of AI, how we can provide the support to emerging regulatory needs, where you are able to explain on a loan getting approved or not, that becomes very important as well. So explainability of AI is something that we have been working on as part of our customer intelligence and insights product. That becomes a crucial foundation here. So that is one aspect. And talking of operational impacts, right, as Doug, you talked about, the very fact of employee health and safety and the risk that employees inherently are now exposed to, either because of comorbidity or because of locational, you need to look at operations from location-dependent operations like branch operations versus remote operations that can be done remotely and where employees are safer working from their home. So you need to look at digitalization of the middle office and back office from these two perspectives. And that's where, when we looked into this problem statement, we worked on two areas. One is risk-based prevention, where in first place we are able to identify employee level risk and get to a plan where I know what kind of staffing I need to do for my location-dependent services. How do I really do a backfill plan? How can I do a rostering around that? But for my remote services, how can I enable remote productivity? What we did was we brought two solutions together from our portfolio. One is IUX for workplace resilience, which looked into risk and risk-based resilience to get into more preventive action and preventive-based planning, where we were looking into how we can really get to a more risk-mitigated workforce planning as well as operational planning. Plus, we combined that with our secure borderless workplaces solution, in short, SBWS. So where on the remote working side, we are enabling through SBWS solution, and on location-dependent services, we are enabling through IUX for workplace resilience, and put together provide an operational resilience solution which, based on risk understanding, based on prediction of risk and how that risk is changing over the 7-day, 14-day, 20-day period, how can we really enable a constantly revolving workspace between remote as well as location-based services. There are good models in place. There are models like Cambridge University had worked upon as 4 and 10-day work rule, right, where you have a group of workforce available for 4 days, and then they go and work remote for the next 10 days. So that keeps the cycle going. So how can you do those kind of rostering with the view to your risk and risk prediction and impact of operations? That becomes a really critical aspect. So these are some of the operational aspects. Yes, Sean.
Yeah, Suman, I think that's, those are all the right things that we're going to be looking at too. When it comes to our business, as I said, our retail network is really a differentiator, right? So that's a competitive advantage. So we're not going to ignore, right? I mean, yes, we are going to become an omni-channel, we're going to become a digital company, but we also have to reimagine what our retail network or retail branches look like, right? So to your point, scheduling becomes so critical moving forward. I fully envision that we're going to have socially distanced lobbies, we're going to have senior hours, for our elderly customers who are not comfortable interacting maybe with us digitally, right? We will have to figure out how we enable self-serve capabilities at our retail branches where you don't really have to interact with an agent if you don't want to, but you still have people available to assist if you need. So things like that we are looking at, is what we call a superstore concept. What would it look like? And as we start looking at some of this data that we are capturing on a daily basis, that's really helping us identify some of those retail modernization sort of initiatives that we need to initiate to work in this new world, basically. Yeah.
And that's a very important point you said, the clienteling opportunities, leveraging data and ability to really go deep, set up these personal times where on appointment basis, maybe elderly hours like you talked about, where you can provide that relational experience to your customers and really transform branches from transaction centers to really, investment and wealth centers and really more long-term relationship building centers. So the clienteling opportunities are huge, especially with leveraging analytics to have very targeted advice and nudges for customers and helping them really get to a more secure financial future. And that's the goal to really extend to customers in these times.
Excellent observations and great advice from both of you. As we wrap up this question, just a quick reminder, for more information, visit dss.tcs.com.